practical problems shall not be asked, but this theory portion can be asked in examinations. So capital gains is one of the heads of income. What is capital gains? When there is a sale or transfer of a capital asset by an SEC, and income is generated. For example, one flat I purchased in the year 2005 for rupees 5 lakhs, and in 2023, after 18 years, I sold that flat for 50 lakhs. So I bought it in 5 lakhs, now sold it for 50 lakhs. So there is an income of rupees 45 lakhs. That is mathematical profit. You will have to see whether it is long-term asset or short-term asset. Is that clear? If it is long-term asset, in that case, indexation benefit will be given to that asset. मीन जो 5 लाख आपने 2005 में खर्च किया था, उसका आज की तारीख में क्या वैल्यू है? तो 5 का बढ़ा के आ जाएगा 12-14 तक, and that will be deducted from sale price 50 lakhs. So less tax will be there for an SEC. Is that clear? Now short-term capital gain and long-term capital gain. Why this differentiation? There is difference in the rates of tax. If it is short-term capital gain, there is normal rates of income tax, and for long-term capital gain, special rates of income tax are applicable. Second thing, section 54 exemptions are applicable. 54B, 54D, 54EC, 54F, 54G, 54H, all these provisions are applicable to long-term capital gains. So SEC can reduce the tax liability within the four corners of law. He can take a benefit wherever possible for the exemption from tax payments. Okay. Now what is capital asset? If you will see, capital asset means any kind of movable or immovable property, excluding number 1, personal effects like furniture, wearing apparels and vehicles, which are for personal use of an SSC, that are not capital asset. Rural agricultural land. What is rural? Any land situated from 8 kilometers from the local limits of municipal corporation or cantonment board. If the population of municipal corporation area is 1 lakh, then 2 kilometers as per new provisions. So any such land which is situated within after 8 kilometers or 2 kilometers, that becomes rural agricultural land. It is not capital asset. If it is sold, then no tax is applicable. Very important. Stock in trade, consumables, spare parts, raw materials which are usable in manufacturing industries, or traders which are using stock in trade, retailers, that is also not capital asset. Clear? But personal effects like jewelry, drawings, paintings, any archaeological work shall be treated as a capital asset. Is that clear? If I have a chain of rupees 5 lakhs in my neck, then it is capital asset. I cannot say this is my personal, I will not pay tax. So if it is jewelry and other given things, then tax will be payable if these things are transferred. So it will be an important definition. Now we will see what is long term and short term. Friends, short term capital asset means any asset which is held by an SSC for less than 36 months. 36 months means what? 3 years. In case of shares, scrips, bonds, debentures, securities, any kind of security, 12 months. Then it is short term capital asset. Long term capital asset is what? The asset which is held for more than 36 months, and in case of shares and securities, 12 months. Then it will become long term. So SSC will have to check the date of purchase and sale. Even you, as a tax professional, for calculation of long term and short term capital gain, the date of buying and date of selling is very important as per the documents. So short term capital gain arises from sale or transfer of short-term capital asset. Same way, long-term capital gain arises from sale or transfer of long-term capital asset. Cost indexation, inflex, cost inflation index benefit is applicable to long-term capital assets only. Section 54 exemptions are applicable to long-term capital assets only. No exemption is given for short-term capital assets and short-term capital gain. Shall I hope it is understood? If any question, then you can ask any question, any doubts. That's all.